right? So a lot of times people want to buy stocks, they just want to buy random things, but they don't understand that you're actually buying a company, right? So when you're picking stocks, you want to pick companies that are profitable, companies that are making money each and every single day, right? So that's how I kind of look at it, right? And in the stock market, you make money two ways, right? So you can get dividends, right? I'm on my writing. And then you got a stock right here.
What's the difference between those two?
So a dividend and you get equity. It's pretty much, so a dividend you'll get paid. Dividends, they'll pay you quarterly or monthly, right? Pretty much you get paid. The stock is doing very well, you get paid quarterly, you get paid annually, right? So that's what dividends are, right? So it's pretty much like, you pretty much get rewarded for being a shareholder, right? So the more shares that you have with the company, you get dividends, right? So that's why I like the stock market, is because now if I have an Apple stock, instead of me just put my money in the bank, right, I can get a percentage of whatever shares that I'm getting, right? So you're getting a dividend. It could be, so if a company has good earnings that year, you get quarterly dividends. It could be, sometimes it all depends on how much money you put in. So more money you put in, of course, the more dividends you'll get, right? It's pretty common sense, right? But here's the thing though, I feel like all this is cool, right? But in order to really build wealth, you need two things, right? You need equity, right? And cash flow. Ultimately, this is what you need right here. This is how we're gonna build wealth. So that's why I feel like the stock market is a great tool for that, is because you could do both those things, right? You can get cash flow because companies every single year, they're producing assets, right? So for example, Apple, I always talk about Apple because if you look at the way Apple does business, is that they don't just only make money off phones, right? They make money so many different ways, right? They make money off the AirPods. So if you look, for example, I think I saw a stat that said that Apple makes I think $30 billion just off AirPods. So they're making more money than Spotify, right? Which is crazy. Yeah, they make more money than Spotify, right? Just off AirPods alone. I think even Tesla as well too. They make more money than Tesla. So we're talking about each year. Like each year when the quarter earnings, when the earnings come out, that's how much money they're making. So it's not just off products, just like Apple alone. They're making money so many different ways. But ultimately, this is the goal though. It's equity and cash flow to double whatever it is. But here's what I found out. I feel like most people always ask me like, Hanny, when is the best time to buy? When is the best time to get in? What I do a lot of time, I study economics, right? That's how I started looking at the stock market. And I found out that the stock market is rigged to stay up, right? So if you look at recessions, you go back to 2008, you look back, like every recession that happened, what happens a lot of times? Does anybody know? Anybody want to know when a recession happens?
The dollar went up.
The bank comes in and they save everybody, right? So that's why I feel like the stock market, I always tell people, is rigged to stay up, right? It don't matter what can happen. We can have COVID-19. We saw what happened during COVID 2020, right? The market went down, 30%. But what happened? The banks came in, the central banks, what they do? They printed all the money, right? So now what happens? The wealthy people got richer, right?
Yeah.
And then the middle class became poor. Because, you know what I mean? So we have Ziggy right here, right? Say, for example, right? Ziggy, he went out of job, right? He didn't have no money, right? And now he's unemployed. So now what happens? The government's like, oh, now we're helping you out. We'll give you some money. Ziggy takes that money, you go buy an iPhone, right? And now what happens to Apple stock? The stock goes up, right? So now who's becoming richer? The people that waited for the opportunity, right? People like Warren Buffett, people that were stacking all their cash when the right time came.
Yeah.
So I feel like it's all about opportunity and you really like utilizing it, right? Because I read a book that talked about how it's a book about how wealthy people that are successful, people that are rich, they wait for times like that. When times are like everything kind of drops, right? And they take their money and they just dump it into the market, right? Because the middle class is most of the time they're running out or they're probably in debt, things like that, right? So I think it's all about opportunity and just seeing it and then just being informed with the news and information. You know what I'm saying? Because that's how the market works. You can't really predict it. You can't be like, oh, I'm gonna put my money in today, and then next thing you know, I'm gonna, try to get rich tomorrow or whatever it is. It's like a long-term game, pretty much. So what I do, my strategy is, if somebody wants to get into the market, I always tell them just make it simple, right? What do you use on a daily, right? Okay, it's simple. What does most people use for the laptops, for the computers? Microsoft, right? So boom. So I tell people just keep it simple, right? So you got Microsoft, right? I always like it. My mentor told me this years ago. He told me all you want to do is you want to keep it simple. So he told me a strategy. He said 2 tech, 2 index, right? So what I do is I always go at Apple, because if you look at Apple, for example, the reason why I keep saying Apple so many times is because if you look at the S&P 500, which is the 500 largest companies, right? The biggest holder in that company, in that basket, is Apple, right? I think Apple is weighted at about, I think it's about 15% or 20%, right? So that's a lot of money. So that means that the S&P 500, the reason why it predicts everything is because, say for example, people that have their ARA, whatever it's called, their retirement money, right? I don't know what it's called in Canada.
Yeah.
In Canada,
RSP.
yeah, I think so. Yeah, RSP. Most people put their money into that. So there's people who've been investing in the market like 20, 30 years ago. So a lot of them, all they know, their conditioning is just to put, I'm going to put money into S&P 500. They don't put money into regular stocks because they know that stocks can fluctuate. They go up and down. If you put money into the S&P 500, for sure you beat the market. Because if you look at the S&P or the NASDAQ, so on average on a 10-year period, the NASDAQ actually beats everything. It goes up 9.6% in a 10-year period, right? So your best bet is to put it into an index fund, right? So my strategy is 2 tech, right? So you got 2 tech, 2 index, right? Yeah. Which is me, so I was talking about Apple and I said Microsoft, right? So I just keep it simple, right? And then so when it comes to index, you guys probably want to know what index you can probably get, right? So an index fund, so if you want to buy the S&P 500, which is the largest company, we call it the SPY, right? SPY, that's what it's called, right? So it's pretty much simple. It's called SPY. I'll tell you why the SPY is so powerful. So let's go back to 2008 again, right? So if we go back to 2008, Warren Buffett had this bet, right? He made this crazy bet against all the biggest hedge fund guys, the guys that are making millions of dollars. So he bet that, he said, okay, you guys are making all this money on regular stocks. I'm going to bet, I think at the time he bet, I think $2 million. I bet $2 million that if I put money into S&P 500, I'll beat all you guys, right? And at the time, the S&P 500, it wasn't really that popular. Nobody really knew the strategy. Warren Buffett is like, okay, let's do it. So he put the bet out, and I think he won that bet in like 2015, 2016, right? So he made $1 million bet, right? Because the S&P 500, like I said, it doesn't just go up. It's not just one stock. It correlates, right? It goes up and down, compared to you put your money into a Tesla stock and it drops 50%. Now you lost all your money. You know what I'm saying? Compared to if you put it into a S&P 500, now you have all those guys that are about to retire, people that have been in the market for so many years, they're always going to keep putting their money in. The reason why is because they keep dollar cost averaging, right? So they're not just buying one time during the week. They're buying consistently, right? The S&P 500, right? Because they know it's the safest bet into the market. So what I say is you pick the S&P 500, and then what I also like is everybody here uses iPhones, right? In the stock market, it's called technology, right? So technology would be something like, Microsoft would consider it technology too, because they innovate so many things. So I like SPY, plus I like QQQ. I feel like those are the two that I really like. Like those always beat any market, right? So you keep it simple, right? You pick 2 tech, and then you go 2 index, right? Because ultimately you be able to beat the market on a long-term horizon, right? So the reason why I say Apple is because Apple is recession-proof. Everybody has an iPhone. I mean, they're never gonna get out of business for sure. I mean, you got a Samsung, but it's all good. You know what I'm saying?